Welcome to the Bank Marketing Show, the podcast that engages and informs you for success in today's marketplace. It's the show that will make you a better marketer with trends, tactics, and inspiration from experts and industry leaders. If you're wanting to impact your personal success and position your bank as the best choice in your market, you're in the right place. Now let's dive into today's show with your hosts, Chris and Dan.
Hello, everybody. Welcome to another episode of Bank Marketing Show. We are glad to be here with you. Dan, how's it going today?
It's going all right. It's going all right. Enjoying the last couple of days of nice weather before we get into the winter.
Yeah, it is. I know our recording of our episodes are meant to be evergreen, but we're definitely at a season change.
Yeah.
Yeah, we're between turning the heat on at night and the air on during the day, and
Well, my point was, I hope whenever you're listening to this, it's nice out there.
There you go. Yeah. Well, Dan, we were talking before the show, and we've been through a number of episodes that have really been outlining marketing specific areas, and starting with strategic planning and then going all the way through a large list of things from messaging and budgeting and audience and all kinds of things that I think have been beneficial, and we've gotten some good listenership feedback about. And now one of the things that we wanted to do also is kind of flip the page over a little bit and look at some direct pain point and challenge items and have some discussion around those and how they can be addressed.
Yes, and we've touched on I feel like a whole slew of pain points or ways to improve processes and the ways you're doing things, but lately both Chris and I have been having a lot of conversations around specific things that are top of mind that you're trying to solve. So yeah, I mean, like you said, we're putting together a couple great episodes here on diving in deep on specific things. So today we're going to get into customer attrition and retention, just kind of ways to think about the problem, what to do about it, and hopefully ways to reduce your churn.
Yeah. Well, that's great. And it will be, I think, important to dive in and look specifically at your numbers, because, Dan, we're all in the marketing world and in the financial services industry trying to gain more customers. Okay. So whether that's consumer side, loan side, whatever the case may be, right? But if we've got too many dripping out the bottom of the bucket, then we're having to run harder and run faster and work harder, and the cost of new customer acquisition is higher. So I know that was really what we wanted to focus on here and talk about some specific ways to address the pain points of churn, customer loss, all the different terminologies for it.
Yeah, I a lot of what we've focused on in this podcast has been, just the pure kind of advertising marketing side. How do we attract new customers to your bank, credit union? And but we cross sell to existing customers. Getting more revenue from existing customers is also a huge area. I know we've touched on it a few times. And then churn, retention, keeping customers from leaving. Right, they're your current customers. They know you already, so you don't have to do all the trust building. And there's ways to keep them happy, right? Depending on the size of your bank, some banks have retention teams, some banks have full customer service teams outside of marketing. But if you're a smaller bank, you may be doing a lot of like the ongoing emails and education and things like that. So lots of different ways to break it down. But at the end of the day, if you can keep more of your customers in-house, prevent customers from leaving, that's going to mean more money kept on the table.
Yeah. Dan, you and I have both been in this with our agencies for many years. And one of the overlying discussions is constantly about relationships. Banking, financial services is about relationships, community banking in particular, and community banks that are trying to battle against the large regionals and the nationals. And one of the big key answers to business success is around relationships and strengthening those relationships. So I think that's some of what we wanted to cover today and talk about that. And as you mentioned, there's a reason that some of the bigger operations have entire departments around this is because how crucial it is. So if we're gaining 3 new customers a week and we're losing one, then, and because natural attrition is going to happen. I hate to break this. Hate to break this, everybody. We're all going to die one day. So,
Right.
there's just one chunk of your customer base. So if you have 7,000, 10,000, 15,000 customers, whatever, or many more, whatever your numbers are, you're going to have move-aways that are just not going to continue to do business with you. You're going to have deaths. You're going to have things that are uncontrollable attrition, right?
Yeah, and the way I think about it is, if a lot of banks actually, when I talk to a lot of our clients, they talk about, hey, net accounts, if we were plus 10 or minus 10 this month, but that this is kind of obvious, but that hides the fact that maybe it's 150 accounts got opened and 160 got closed, right? And so maybe out of that 160 that got closed, like you're saying, 100 of them were people that moved, people that died. But then there's 60 of them, right? What about those? What about the other 60? Could you save 10 or 20? If you save 10 or 20% of those, even that, then it's 30 accounts you've kept at the bank. And then you've got a net plus 20 that month instead of a minus 10.
There you go. And the opportunities that exist from that to gain larger share of wallet, which is something that's a perpetual part of our marketing and strategy conversations as well, and should be.
Well, and that's a nuance too in the world of attrition is erosion of revenue, right? With fintechs, there's just the proliferation of fintechs that we've talked about a lot. Mean that maybe somebody opens a little account but isn't, they don't really have a primary financial institution anymore. They got the place where their paychecks are deposited, which used to mean that you're their PFI if they're depositing your paychecks there. But they might have 10 different apps or accounts and have money in different places or leave a big balance in PayPal that they do things with online. So there's the sort of quiet, there's this whole trend in the last few weeks of talking about quiet quitting, so you can think about something like quiet attrition, right? Where the revenue you get from current customers is eroding. Maybe they used to keep a high daily balance and now they've got money in lots of different places. You may still have that direct deposit, but they don't do nearly as many transactions or they don't swipe their debit card as much.
Yep.
That type of stuff. So it's also not just net account opens and closes. It's, do you have customers that are quietly kind of receding out of the bank?
Well, so let's dive in a little bit because I know in preparation for this episode, we talked about covering some marketing related items and all that. And then we'll roll into the utilization and opportunities around data as well as we dive into some of this. Yeah.
Well, I know you were chatting with some clients. You were out traveling around recently, so you were chatting with some clients around this. It's attrition's kind of always been around, but it seems to be kind of a hot topic these days. What are you hearing from your customers and contacts right now?
Yeah, that's a lot of what I'm hearing is I think during, the first 2.5 years of the pandemic, and certainly during the maybe 2020 and even 21, a lot of our bank customers were seeing maybe a little less attrition, and it was harder to get new customers and get them to move, but it also meant that people were sticking more as well. Well, now we're moving into lots of things that are causing, I think, a transformation in that positioning. And financial institutions got pretty cash heavy for a while, and then loans, and now we're in an increasing interest rate environment, and all of those things. So it's discussion for us, Dan, with our clients around what are specific steps that we can take to, from a marketing perspective, but to improve retention, okay, and communication. There's the big key topic around that, it is number one, and part B is additional value. So it's communication and additional value. And so how do we go about, doing those two big things? Because I'm going to be less reluctant to leave my bank if I feel like I have an improved relationship with them. And that can be done largely by communication. And if they aren't giving me reasons to leave, like, well, we don't offer debit cards. You have to write a check anymore, or what? I'm being sarcastic, but I'm saying, but if you're giving me barriers to what I know exists out there in this day and age from a technological standpoint to be able to function more easily and fluidly and efficiently in the world around me. So if you're going to offer me more of those and communicate with me better, I'm far more likely to stay.
Yeah, absolutely. I mean, and most community banks, probably all of you listening, like, you have technology, you have the features, but if you haven't done education or you haven't, reached everybody, people might not know you have the mobile deposit or know that you have the text banking, right?
Mm-hmm.
And these can be, even these little things can be reasons people leave. I mean, it takes a lot to get somebody to leave a bank because it's kind of a pain, right? But
yeah,
eventually the pains add up, right? Or the pains add up, plus there's some kind of catalyst, right? And and then they jump ship. But it's a lot of the little things that can keep you there. So sometimes it's just educational campaigns can keep them in there. I was reading this. I have the study printed out on my desk, and we can link to it in the show notes. It's like a Boston Consulting Group study that's talking more about kind of commercial and corporate banks, but just saying, like, if you kind of do educational campaigns, you arm your relationship managers, commercial bankers with information. The study showed, like, banks can reduce attrition by 20 or 30%, right? And just, it's a lot of little things that add up. So how do you create the process? How do you create the consistency in doing these little things over time?
Yeah. Well, so Dan, with one bank client of ours fairly recently, what we looked at in doing that, and you mentioned campaigns, is developing a whole set of campaigns based around touches. So everywhere that we touch them or touch current customers or how can we do education, relationship improvement of some sort, offering of new technologies or services, whatever the case may be. So they had email addresses, but we're not doing email marketing communication to their current clients. Okay. If we all know about email marketing, if it's always the hard sell, then your open rates plummet. So, what can we do in your email marketing to not be too frequent, to be juicy and informative and resourceful to current customers? And a lot of, did you know we can do this for you? And, all of the offerings, and a lot of those that are not additional fee offerings or, switching account types or any of those kind of things. It's, are you taking full advantage of, all of these current offerings? And I know all financial institutions should be communicating that to one extent or another, but the way that product and services offerings are now, it's easy to have add-ons, and all of those types of things. So it's communicating all of those through email marketing. And then, they were talking about, well, our lobby traffic is down, but our drive-through traffic is still pretty good. And these are kind of, pandemic phase discussions. And so everybody's getting a deposit slip or a receipt. So that actually did some printout changes, and we designed some receipt and deposit slip stuff that had some of that information on the back, and anyway, and QR codes, those types of things. So it was all these different elements of the various touch points, Dan, and I'll probably think of a couple more elements of that campaign, but it was being very intentional about, the communication and the offering of increased value.
Yeah, right. Make sure you mentioned, lots of different touch points, but I think in general, right, like, the direct promotions don't really work in a lot of places. They plummet your open rates on email, and they don't really work on social media, at least in the banking space. But if you take that perspective of added value, right? Like we're not just like telling you we have this product, but we've got, online banking to help save you time. We've got, and that's an obvious one, but we've got, here's how you reset your password because we care about your time. We care about, we know you don't want to call us, right? Any more than we want to answer, 20 password reset calls a day. But what you're really doing from an attrition standpoint is reducing frictions.
Well, and the cores and some of the different providers for products and services through a lot of our bank clients, we're seeing more and more things now like free credit score checks and all types of additional offerings that are spice on top of your standard products. And so why not talk about those, because not everybody is going to utilize roadside assistance as part of your checking products, but a few might, and a few will, and if somebody is if you're making sure that your current customers are aware of every opportunity that is part of the relationship that you have with them, whatever those may be, then you're going to hit some that really matter, to some people,
well,
and you've got them.
And everything is so fragmented these days. You mentioned roadside assistance. That I renewed my car insurance recently. Right, this is tangential to banking. When you do that, they offer roadside assistance, and I said it was like $2 a month. I'm like, okay, well that's just worth having there. But I'm like thinking like, if I actually were to get into a car accident or my car breaks down on the side of the road, am I going to remember that I have that? I don't know. If I'm panicked or like, and so the same thing happens. We have there's so much added value out there with lots of different services that we buy, from, streaming TV to a bank account. So part of it is just, we got to educate. We got to talk about that added value, and talk about how, maybe people won't remember the specific roadside assistance feature, but if you, are positioning yourself as the most valuable part of the customer's, financial relationship, that's going to make it harder for them to want to leave and have you think, help them think of you first when something comes up. So, right, what are your touch points? What is the most important thing to be talking about to your customers there? And then how do you talk about it as a added value? We're here to help you kind of thing versus,
and from a
product.
strategic messaging standpoint, Dan, another part of this conversation, and we're actually working on putting a campaign together for another bank client around this now, it is showing that life journey. So, my kid set up a student checking account for them, and then college savings, and all of these things around kind of the beginnings of that relationship, and then they graduated and they got their first job, and then they got married, and then they need their first home, and then she and her new husband decided to embark on a new small business opportunity. So they came back to the bank, and talking about the lifespan of this relationship, and painting that picture was really cool. So that and if we're using various marketing opportunity touch points to tell some of that story or tell parts of that story, then what a great way for self-identification with, I really don't have to leave this bank. I guess, they can see me through all of these various things. And I think that's huge. So, there's an opportunity there, even in messaging and storytelling, that is very directly related to retention, by making sure that I believe as a customer that there's opportunity there, for me with everything that's likely to happen in my life.
Right. And you're position the bank as that solution provider, no matter what your stage.
You got it.
Right. And talk about the little features, because right, like the erosion we were talking about earlier happens from an app specializes in a certain feature and people move part of their business around. But, we want them to think of you. So if you start with that positioning of your partner throughout all the phases of life, phases of business, phases of, raising a family, that's a great basis to start from, right? There may still be some work, and we're going to talk about the data side. There may still be some work for the bank to do to monitor you and make sure that your customers are not kind of forgetting that as they go through.
You're exactly right. And Dan, I will say this. I think an important part of the message to listeners to this podcast is you better assume that your competition is putting that value out there.
Yeah.
And you need to have that mindset and assume it. And so you assume that your customers are being messaged to by other banks, fintechs, all of the, out there, and they are. So if you're not communicating with them to maintain the relationship, man, at some point, there's going to be a life change reason or a something, that is going to spur them to leave when they could have made a choice to stay and not only maintain the relationship, but grow share of wallet. So
yeah, staying is the easy option, right? And people will choose the easy option every time.
Love that.
But if you aren't talking about the value you add, right? Or there's things going on that make it not the easy option. There's the obvious stuff of if you don't have a particular product or service, like people might leave, but it could be lots of stuff like we have online banking, but it's a 10-year-old system and it takes 18 clicks to get into your thing. Those little frictions can add up over time too. So, you can get into this. It's probably a whole other several episodes here of like customer experience, but I think, remember that staying is the easy option, and that's the default of most people. So if you create those campaigns that to inform them of your value and keep reminding them over time, and that in and of itself will have an effect.
Beautiful. So Dan, to flip this forward a little bit too. So let's say, okay, I'm Bank XYZ, and you're right. I hear you guys on the bank marketing show, and you're right. So we need to communicate better. We need to do that. Okay, so how do I start doing that? Well, the first thing that we need to do is the utilization of the data that we have. So Dan, talk a little bit about what you and your agency are doing in that realm, and kind of how that whole system needs to look for a financial institution.
Yeah, most banks, right? You've got your like the commercial or the business side, right? Where your big loan customers have a relationship manager, right? Or have a lender, and they're on top of things, right? They know the ins and outs of each customer, and they will probably notice when something changes. They're like, oh, I haven't heard from this guy in 3 months. Usually we talk every week. I better reach out and see what's going on. So the trick, though, is you've got 50,000 other customers, right? You've got your whole retail set. You've got a lot of small business customers that maybe have never talked to somebody at the bank. You've got a lot of retail customers that haven't talked to somebody at the bank, maybe don't come in, maybe just naturally don't come in. But so what do you do with those thousands of other customers? How do you recognize when when they're about to leave? So, I'm working on a project through my agency. We're building a predictive analytics tool around attrition. But the way we're, looking at it is like, let's look at all the customers that have left, right? It's a sad thing. But let's go back a year, right? All the customers that left within the last year. And can we look at the 2 or 3 months of data, transactional data, or whatever you have, right? Data on those customers from the period right before they left. What was going on? What was changing in their data right before they pulled the plug, right? And there's a number of different ways. I say pull the plug, right? You can look at it from erosion, or you can look at it from actual account closure. But essentially what we're doing is you build an analysis to say, okay, well, in the 3 months before they left, their average daily deposit dropped by 50%. They had no recent large transaction history. They stopped their ACH. The deposits used to come, they used to get a wire in every month, and that went away.
Right, like payroll deposits or whatever. Yeah.
Yeah, or whatever, right?
No, stopped. Yeah.
The transaction volume dropped, right? They used to swipe their debit card 50 times a month, and now it's 10 or 0. right? Indicating they got some other credit card that they started to prefer. So there's you could, hopefully your minds are spinning here, but you could come up with a bunch of those things, kind of signals in the data to look for, right? And once you see, hey, in 80% of our closed accounts last year, there was I'm making these numbers up, but there was a 50% drop in average daily deposit in the 3 months before they left. Then you can come back to today's data and start looking for that pattern now. Like, what active customers do you have this month whose daily deposit has dropped 50% over the last 3 months? Well, those are the folks you should call, right? And you can pull a list of those and have your relationship bankers reach out to them, right? You can run a direct mail campaign, run an email, send emails out to that group. But so that's where we're talking to all the different touch points. But that's you pull the list from the data, and that's where you layer all the touch points on top of it.
Yep.
In that model, right, we could come up with 100 variables probably that might change. Maybe some of them are more significant than others, but you can come up with a model like that yourself and run something like this on your own every now and then and kind of see what you come up with. So that's kind of what we're working on as a tool that kind of builds that model, bakes in those 100 variables so that you can do this faster. Because once you start looking at long periods of data from a transactional standpoint, it's probably millions and millions of records, right? And you can't just throw that into an Excel spreadsheet like every banker probably wants to do and crunch it, but it gets too big. So, but on your own, there's ways to look at it too of, hey, you don't have to look at every one of your customers. You can look at a small subset of them. You can start slicing and dicing in terms of value, right? So start with a query of who had a daily deposit balance of over 100K and then it dropped to under 50. So start out with like high deposit customers that might be worth more to you that dropped, and start there. Break it down. Think about who has the most value, because like most banks, you might have the commercial customers make up most of the revenue, right? Or maybe there's a slice of the high net worth retail customers that actually bring in the most revenue, and that's probably a good place to start. Is retain the customers that result in the most revenue first, and build out your kind of a attrition practice that way.
And it's simple prioritization, Dan, is what you're talking about, is having the data and information in front of you to not just wonder, or golly gee whiz and hope we can slow churn rate down, but ways to actually have prioritize lists, and then behind that, intentional strategies for communicating with them to significantly slow down attrition rates.
Right.
And again, the beauty of what you just said is it's easier to not leave. So, putting time, money, effort, focus into what it was that you've just been describing for the last 5 minutes, and that prioritization is, from our perspective, meaning us as the banks, as the institutions, as the agencies that work with them, is easier than new customer acquisition.
Yeah. Well, and this, go back to the study that I mentioned earlier. This says, and I'll quote the study, 60 to 80% of retention problems stem from service issues, product gaps, and other factors, most of which are internal bank concerns, right? So meaning 60 to 80% of retention attrition could be attributed to things that are under your control. If only you reached out, when you started to notice the problems, right? So from the data perspective, you're just trying to identify what are the patterns, what are the anomalies in your data that could indicate somebody might be ready to leave in the next few months. Because leaving is it's a long process at banks, which is good. You can use that to your advantage. But realize that it's probably a somewhat minor, something you might think of as minor, but even the minor stuff, if gone kind of unchecked in the customer's mind, can kind of fester and grow. And then a catalyst happens, they have to resubmit their direct deposit information to their company, or they switch jobs anyway. And suddenly I might as well just open up a new account and send it there. Little things like that happen. But if somebody had reached out, maybe you could have, sort of saved that, right? And the beautiful thing is, community banks are great at relationship building anyway. You just need, like you're saying, the prioritization catalyst to kind of say, okay, these are the people we need to reach out to. You can't call all 50,000 customers every month, but now we have a list of high attrition, likely folks that we can call this month and say, hey, what's going on, right? Like, you learn, I was having this issue with online banking and it's really frustrating.
Yeah.
Solve it for them. You're good at solving those problems. The relationship bankers are good at calling people, talking to people, and working through and learning what's going on. So, having some data analysis will help them do what they do already very well.
There you go.
I've worked with other businesses in the past where it's opposite, right? We're really good at the data. We can identify where there's problems, but we don't have anyone that can just call, right? Or we have a offshore customer service team that isn't equipped to have those conversations. They're equipped to deal with shipping issues and whatnot if you're like a retail company, but community banks are set up to have those conversations already. It's just a matter of getting the right list or directing those relationship manager conversations to the right people.
There you go. So best use of intentional data and, big difference makers. So
yes.
Well, and Dan, I'll be interested too, as it goes forward with some of your clients using that tool and taking advantage of that, of what kind of a decrease in attrition and increase in retention that they're able to do from that. And we have the ROI discussions all the time, right? So put in these efforts and this spend toward what ROI outcome. And so those could be some incredibly juicy, valuable numbers that you're talking about, these financial institutions being able to do.
Yeah.
So.
Yeah, exactly. I think if, like the study I was quoting says, 20 to 30% reduction in attrition just from doing some outreach when data anomalies or issues are noticed. So I think there's a high potential, like, yes, it's work to do that kind of analysis, but if you can shave 20, 30% off your attrition numbers just by prioritizing a call list and maybe sending some email campaigns, it's well worth the time that you put into it.
Yep. Awesome. Well, Dan, this has been a great conversation. I hope this has really it's gotten some wheels turning, because typically on this show, we're talking about forward-moving opportunities and new customer acquisition. That I hope this one really helped our listeners to stop and think about the value of the time spent and the effort, around what it is that we've discussed today with attention and attrition.
Yeah, I hope so. And I want to throw a plug out there for what we're doing. We try not to do much promotion on here.
Yeah, for sure.
I'm going to throw this in because we're funded for a little while, and so I'm not trying to sell anything yet, but I'm trying to have as many conversations as I can with banks around attrition. And we're building a tool that right now we're calling Filament that will help do kind of some of the stuff we're talking about here. And we're actually looking this fall, if you're listening to this in November, December of 22, we're running a pilot program and looking for a couple banks to kind of join us and share their issues. And then we're going to try to build some stuff that will help you. And there's no, we're not charging anything with the pilot. We just want to learn what we can. So if you're listening to this in that time, I'd love to have a conversation. I can maybe share some of what we're learning and you can share some of what you're learning, but it'd be great to chat. So you can schedule some time with me at runfilament.com, and we'll link that in the show notes, or email me, dan@runfilament.com as well.
Yep.
And, hopefully we're chipping away at the attrition problem.
And if you're out on a run, just remember to go to our podcast site, and we'll link through to that on this episode as well, Dan. I can tell you that if I were a financial institution C-suite person, and I've had a peek at your tool and the capabilities of it, and you're offering a pilot program for that, I'd jump on it in a heartbeat because of exactly what we've talked about in this episode, and this opportunity to have that kind of data around your current customer base, and then being able to morph that data to give you, what it is that's most valuable to those relationships. So I would encourage folks to jump on that, Dan.
Thank you. Yes, I would too.
Yeah,
but even if you just have some thoughts to share, love to have a conversation. with any of you out there. So.
Great. Well, you got it. So yeah, we'll definitely link to all of that in the show notes as well and make that easier for folks to connect with you around Dan. And as we always like to do, we invite our listeners to reach out to either or both of us around marketing talk and brainstorming and other questions that you may have from what we've brought up. So we love to engage with our folks and invite you to do so. And wanted to leave this one also, Dan, and let folks know we've got some great guests lined up for some of our next few episodes as well, that folks we've met at some big conferences and things like that I think are going to add a lot of value to our listenership as well.
Yes, subscribe and share.
There you go. Exactly. So, all right, man, looking forward to it. Thanks for another great episode, and hope you have a great one, Dan.
You too, Chris.
Okay.
Thanks all.
Thanks for joining us. To go deeper or get access to some of the valuable nuggets from today's show, go to bankmarketingshow.com. There you'll find episodes, links to resources, and much more. Be sure to subscribe wherever you find your podcasts. And join us next time.